We recently spoke about Robert Kiyosaki, who had predicted a market crash would occur in October, and of course that didn't happen. But if you don't know who Kiyosaki is, he's a businessman and the author of the personal finance book Rich Dad, Poor Dad. Kiyosaki spoke to Kitco News and explained several factors around the economy that would culminate in the crash, which he described as the biggest in the world. He said, "It's going to be the biggest crash in world history. We have never had this much debt pumped up. Debt is the biggest problem of all. The debt to GDP ratio is at a sink. So when it comes down, and it's going to bring everything down with it, that's when I'm going to be buying more gold, silver, and Bitcoin." Today, we're going to take a look at gold once again. In the past year or two, I've said that gold was facing a headwind. But now, the charts seem to be setting up for a potential move. So while Kiyosaki is still looking for that crash in October, let's take a look at the charts for gold. What we're looking at is the 20-year monthly chart on the Spider's Gold Trust, and the symbol is GLD, and this is the best proxy that I have for the price of gold. So it's going to have to do for now. Now, to refresh your memories, what we were looking at was, first of all, this top here, which coincided with that top there. Of course, this came down here, hit the 20 EMA, bounced back up, hit this second top, and then down we went into this nice long basing pattern, and then that move back up here to that top. Similar to what occurred several years ago, we moved on down and we bounced off of that 20 EMA back to this top here. It hit that point and it started to come down, but it's again right at that 20 EMA, and it may not turn further down. We'll have to wait and see, but here's my thesis. What I'm thinking is that this really looks like a nice cup and then handle. And if you're familiar with the cup and handle, that is a particular pattern that can set up relatively well for large moves. And what would happen is that the price would trail off with volume declining down to some point here, forming that handle, and then it would start moving on up. And when you get to this trigger point there, that's the point that you buy, because once it passes that, then oftentimes these stocks or indices have the potential to really surge quite a bit higher. So that's what we're looking at. Now let's go down and take a look at the oscillators. Here in the volume, you can see a little bit of a sell-off here, not necessarily as much as I would want to see, but it still is a decent sell-off. Now here into the MAC, we can see the formation at this point, that top there, with this top here. Now, right here is where that second top occurred. So the market came on down and then headed back up and hit that second top. Let's go back to the price chart to take a look at that. Once again, here's that second top and then the final failure. Moving on back down again here. So you see that failure came all the way down here and it bottomed and based for several years. Now back up here, it hit that top, came on down, and it had this surge there. Back up to the price chart to check that out again. So it hit that top, came down, and had that second surge to this point here. So where we are in the MAC right now is it just looks that barely it's trying to move up again, but this is in the very early stages, so don't fall for this yet. It still may fail. So, but that's what I'm looking at, and you can see that here also in the histogram, where this is not coming down very far, certainly not as far as it did back here. It's more along the lines of this move here, but that is where we had the move up and then the failure. So we have this move here, and we just want to make sure that we don't have a failure coming in someplace there, and then down we go. Moving here into the other oscillators, we have the price rate of change. That hasn't yet set a bottom or base. So again, we're relatively early. Now the RSI is looking like it wants to try to set a bottom and a base here. So there's a few mixed signals, but I wouldn't move on that one signal yet. Here the stochastics, no setup yet for a true bottom or base. Now the Williams looks like it is trying to set up a bottom or base. But again, only two of the oscillators are showing a potential bottoming and basing. I still want to see that MAC move more sideways and then head up and through that slow line when the slow line comes down like that. That would be a potential buy point. And then of course back here to the cup and handle. Your second trigger or buy point would be, once again, if the price came back up here to this point, which is equidistant to this top here, and then it moved and exceeded that top on the way up. That would be your buy point if you follow the cup and handle. So you do have some time. It's going to take several months to evolve, so just check back once in a while and pay attention to see what happens here. I'll be watching too, and so we'll come back to this if we start moving on up on the price chart and if the MAC starts to move up and through the slow line, the fast line moving through the slow line. We'll come back and check on that. But for now, this is a potential. As for a market crash, I don't quite see that yet, but if you're worried about a crash, gold might be a place for you. But as usual, check out the fundamentals. And for today, that's ChewDog Charts. Thank you.